My name is Sriraj Deshmukh, and I will be your host for this session. We would like to thank our session partner Refinitiv, Gold partner Rieta, Bronze partner Onfido, and Knowledge partner EY. We are now moving on to our next session on how global regulatory developments, industry trends, and collaboration are reshaping risk. I would like to introduce you to the speaker of this session, Mr. Sidanius, who is a global head of financial crime and industry affairs at Refinitiv and London Stock Exchange Business. His role is to identify regulatory changes and lead programs of action with the sole purpose of enhancing the fight against financial crime more effectively and delivering the best possible outcome for the industry. His most notable awards include receiving the Presidential Award for managing the 2007-9 financial crisis and a driving force behind Refinitiv's Impact Company of the Year award in 2019. Over to you, Mr. Sidanius.
Thank you very much. Very humbled by the invitation, and really look forward to today's discussion. I hope you are all well, all the attendees. It's been an extraordinary year, so I hope you and your families are all well and safe. Hopefully next year, or certainly next time, we can do this in person. I very much look forward to visiting wonderful India, which I haven't had the privilege to do yet. So hopefully we'll come out of this hopefully soon, and look forward to doing that. So very briefly, what I thought I would do today is share with you our perspective in terms of what some of the regulatory trends in the fight against financial crime are, also some of the industry trends that we're seeing, and really how increased collaboration all across the public and the private sector is reshaping how we tackle financial crime, how we identify financial crime, and how we make the whole system much more effective. So hopefully that fits well within the agenda. What I will do is have some opening remarks for about 20 to 30 minutes, and then hopefully open it up for Q&A, but please do send your questions to the chat box as well. So without further ado, let me share with you the presentation that we've prepared, and hopefully you can all see that. And again, one of the privileges of the work that we do is because we service so much part of the anti-financial crime ecosystem, whether it's law enforcement, the banking community, non-governmental organizations, and many others. We have a unique perspective in the sense of actually looking at some of the trends from a holistic point of view, but also from a regional point of view as well. So hopefully we'll give you some of that indications of where things are and where things are heading. So without further ado, I'll try to the agenda for today, which is it's a broad agenda. I'll try to do my best to cover most of these points. I'll give you a little bit of a flavor for what's happening in certain regions. I'll also talk about some of the key themes that we see dominate the policy discussion, and also the focus areas in the next few years. Then we'll talk about some of the industry trends, the risks and use of technology. And this comes on the back of a report that we just released last week, in fact, which is part of our annual risk and compliance report that will reflect some of the risks, but also some of the potential opportunities in the use of technology. We'll talk about public-private partnerships. This is not a new term or a new concept, but certainly within the last several years, there's been a real step change and shift and focus on information sharing partnerships, and we'll give you some examples on how we as a company are collaborating and what we're doing in that space, focus on some of the challenges that some of these public-private partnerships are currently facing, including the challenges to scale, the increase in regional coverage, and some other issues that they're facing that we're hoping to solve. And then I'll also talk a little bit about one of those public-private partnerships called the Global Coalition to Fight Financial Crime, which is less about information sharing partnerships from an operational level, but it's much more about engaging with senior policymakers who are currently undergoing significant legislative change all across the world and how we can bring our different expertise and best practice to the table, whether you're from a banking community, whether you're a fintech organization, whether you're a crypto asset organization, whether an NGO, and how we can bring all that to bear to inform policymakers to ensure that any legislative changes and manifestations is really, they're informed by the best thinking that's out there. So we'll talk a bit about what we're doing in that space, and also in fact that we're going to focus our attention on Asia in the next year or so. And then there's some additional material that I'm not going to go through. It's more for your edification in terms of what we see are financial crime priorities and their convergence, in fact, between the sustainability agenda and the financial crime agenda. But we can leave that for another session, but it's there for you to review if that's of interest. So let's take a step back. As many of us know who've been part of the financial crime fight for a number of years, that the level of focus and the regulatory and policy focus on financial crime has really gone beyond just the compliance professionals, and in fact has evoked real scandals and really evoked a consciousness that we haven't seen before in terms of the public imagination on these issues. The EU will release an unprecedented legislative package on anti-money laundering legislation, which in effect is, well, it's probably the most consequential in modern history in terms of what they're trying to do. And we'll talk a little bit about what those issues are. We've seen in the US in January 2021, passed the AML Act of 2020, which again is considered to be the most significant legislative package since the US Patriot Act in 2001. We've even seen the Vatican being brought into some of the scandals due to an unprecedented amount of fraud and corruption in a number of areas, including the London real estate, and even money that was intended to use to help free hostages were in fact siphoned off and used for other purposes. We've also seen focus on other issues like human rights and modern day slavery. We've seen the EU, for instance, take real action against many countries, including Russia, China, and others on sanctions violations as far as human rights is concerned. Of course, we all know about the growth of crypto firms, and that segment has been prone and unfortunately been used for fraud. So there's a big focus both at the Financial Action Task Force level, but also by many law enforcement and regulators in the space. And then, of course, the pandemic and the impact that the pandemic has had on all of our lives, including the financial crime space. The fact that we all work at home, the fact that we're even more now dependent on technology than ever before, that has risen, that has given way to real levels of fraud and corruption. On top of which, the unprecedented stimulus packages that have been issued to support the healthcare sector and to secure healthcare products has also been, unfortunately, been exploited by criminals. So there's a lot there in terms of that space, including, of course, the focus on environmental crime, in the fact that the pandemic, as far as we understand, was partly the result of the interaction of wildlife trafficking in certain parts of China. And so the focus and the awareness of environmental crime has now reached at the highest level, whether it's G20, the Financial Action Task Force that just released a report in July, in fact, on this issue. And we'll talk about what we consider to be the key issues and the key trends in that space. And again, moving on to that, financial crime is no longer seen as just another compliance topic. It really is understood now about the social impact that it can have. We're all aware of the scourge of modern day slavery. There's more individuals now caught in slavery than there were when slavery was legal. And 1/4, a quarter of those victims are children. And there's a real focus, I think, both from policymakers, but also from many other organizations, including our own, to really look at modern day slavery in supply chains. And this also is tied into the focus on human rights, in which modern day slavery, part Article 4, is just a subcomponent of that. But I think there's going to be much more focus on the impact of this issue, and for us to find a way to share information, to share typologies, to really to tackle this horrible risk issue. There's also recognition that, again, financial crime is no longer seen as just another compliance issue, in the fact that with the scandals that we've seen all across the world, that actually it impacts the financial stability of the banking system, the stability of many countries, because frankly, bank assets in many countries are multiples that of a country's GDP. If we look at Danske Bank as just one simple example, the Danish central bank admitted that because of the Danske Bank scandal a few years ago, that in fact it had really put into focus the credit rating of the entire country. It had put into focus the stability of the banking system as a whole. So there's a broad recognition that this is a prudential issue, this is a macroeconomic stability issue, and in fact, it's also an issue that affects capital flows, investment flows, foreign direct investment for many emerging economies. And we've had discussions on this issue in South Africa and many other countries that have been rocked by scandals, by corruption scandals, and the impact that that has on foreign direct investment and other companies willing to increase and invest in their operations within those jurisdictions. And then turning back again to the environmental crime, we at Refinitiv refer to this issue as green crime. That is the fact that green crime is a broad term that looks at not just wildlife trafficking, but a whole slew of interconnected risk typologies, illegal logging, illegal fishing. And when you combine that holistic view, that in fact green crime under our very noses is probably one of the largest, if not the largest, criminal activity when you combine all of those risk typologies. And it's the issue about we need to stop looking at environmental crime or green crime, as we call it, as simply as another sustainability topic, but in fact, it's about peace and security. If we just turn our attention to the incredible impact and devastation on our families, on our economy, then we actually have to take this issue much more seriously than we have in the past. We first launched this topic in January 2019 at the annual meeting at the World Economic Forum at Davos. Unbeknownst to us, and this is before the pandemic really had blossomed, unfortunately, and devastated with its devastating effect. And from January 2019 to now, we have, of course, seen the incredible impact that this issue has had, not only in terms of raising awareness about the transnational threat that green crime has, but we also know from the World Economic Forum that over 50% of global GDP is exposed to the loss of nature. And we need to recognize that the criminal element here has a significant impact on this issue. And through various events and surveys and engagements throughout the industry, whether it's in compliance sector, the fintech sector, the capital market sector, the response to some of our questions were quite astounding. When we asked a very simple question, do you think that green crime is a threat to peace and security? Anywhere between 70 and 80% said yes. When we asked, should in fact green crime receive equal attention as money laundering and terrorism financing, again, 70 to 80% said yes. And that range really depended on which sectors and which industries that you asked, but again, a cross range of the industry at large, not just the compliance sector. As even more eye-opening is we asked the question, should in fact green crime be added to the ecocide as a term be added to the International Criminal Court list of international crimes alongside crimes against humanity, for instance, and over 80% agreed with that. So there's even a momentum now for the International Criminal Court to add ecocide as a measure of real damage that it has, not only on our peace and security right now, but clearly on the future. You would have seen that Financial Asset Task Force have issued a paper, as I mentioned this last week. You would also seen that the G20 issued a real strong statement on environmental crime, and we expect that this not only to be an issue that affects the financial services industry and fintechs, but also the transport sector, the manufacturing sector, in other organizations, really to look at supply chain risk, and also the impact that those companies have, their digital and sustainable footprint all across the world. So this will no longer be seen, in our view, as looking at sustainability in terms of what we should do, but in fact, looking at green crime on issues that we should not do. So these will be, I think there'll be more sanctions issued, there'll be more enforcement by law enforcement on these issues. And as many of you will know, or at least be aware, I mentioned that the unprecedented regulatory reforms globally. I mentioned very quickly the US AML Act of 2020. We'll talk a little bit about the EU's legislative package in a moment. But as I mentioned, the environmental crime agenda, the B20, which is the industry advisors to the G20, are promoting public-private partnerships and information sharing partnerships in a way that we haven't done in the past. We'll talk a little bit about what we're doing on information sharing partnerships and how there's new trends and new types of those frameworks that are coming to fore, and we'll talk a little bit about some of the examples that we're involved with. We all know that the concept of obligated entities, and in terms of who's required to follow anti-money laundering rules and screening rules and customer due diligence, has been expanded to include other sectors, as we know, with crypto assets. That's just one example. And then we'll talk a little bit about industry trends, risks, and the use of technology. And then we'll finalize with a discussion on the global coalition. So let's turn our attention to the EU for a moment, because this hasn't been released yet, so it's not public, but we've seen copies of the EU's AML package, and we think that this is a precursor of regulatory trends that are going to spread all across the world in many different jurisdictions and regions. I won't belabor on all of them, but I would focus on a few. The first is that for the first time, the anti-money laundering rules will move from what's called a directive, which means that member states have some wiggle room in terms of how to implement them, and they will move from a directive to a regulation, which basically means that those rules will be directly transposed into member state law. This is a big deal in the sense that there's an effort to try to harmonize the regulatory rules, and there'll also be a big enforcement a part of this as well. So not only will sectors and industries and companies be punished for not doing enough to implement those rules, but even member states themselves. And we've even seen in Europe, Malta being added to the gray list, and we expect other countries added to the gray list as well. The other key provisions that we expect to be get more focus is on public registries or ultimate beneficial ownership regime. There'll be a big focus on that in terms of making sure that the member state public registries are interoperable, that the information is verified, in order to allow organizations to actually understand who they're doing business with, what the operational structures are, and what the ownership structures are. As contentious, if not one of the most contentious, is the fact that there will be yet a new authority, a regulatory authority, that will be constructed from scratch. So the current scope of having AML regime at the European Banking Authority will move away, and in fact there will be a completely new regulator to actually look, assess, and enforce EU AML sort of legislation and progress. And then there's other issues that we probably won't have time for, but there's a number of other provisions as well. The AML Legislative Package is just one. This is part of a broad package that looks at more due diligence when it comes to corporates and supply chain due diligence. There's going to be an environmental crime directive. There's going to be more focus on electronic identification, more focus on KYC requirements, and on and on and on. So we expect that the EU themselves have really called on themselves that they want to be one of the leading drivers and forces for enhancing the current regime, and they will most likely take a much more active role in the international stage to actually engage with authorities in India, in Asia more broadly, so sub-Saharan Africa, the Middle East, and the Americas as well. A quick look on industry trends and risks in the use of technology, and this very much comes at the heel of our newly minted risk and compliance report. We will make sure that that's available to you within the presentation that we have here. We do have a slide in the end that has a lot of the references to some of this data that you'll make sure that you'll have available to you. So there's a few things that we looked at. And this is part of our annual survey that we conduct with thousands of companies globally with multi-billion dollars in revenue. So these are large organizations where we try to get a sense of what are the pressures, what are the risks that you're facing. And I'll just point out just a few. It continues to be the fact that the commercial pressures dominate in terms of the decisions that companies make on relationships, partnerships, and business opportunities. So 73% says they're under incredible pressure to increase revenue, and that certainly hasn't gone away. In fact, that has gone up since the last time that we conducted this survey. And some of this is understandable in terms of the context of the pandemic and the impact that that's had on many different industries. We also see, however, and this is a function, I suspect, of the first question, but where we ask, do you actually conduct due diligence checks? And majority, 56%, said they don't. And this is a bit of a worrying trend, and from our perspective, is an area that's going to increase the risks of an organization being either a potential sanctions being issued, or being caught in some kind of supply chain or sanctions levied against them. So this is quite surprising to me that that number of organizations don't conduct any due diligence checks at all. 64%, this is not surprising for what we hear from many organizations, that the focus continues to be regulatory compliance or a tick boxing exercise, in terms of do you have policies and procedures and sort of the bare minimum of being able to demonstrate to regulators that they have a program and risk program in place, risk and control program in place. But majority of them don't focus on prevention at all, which is an area that we're trying to encourage more organizations to do. Cybercrime, we mentioned that. There's no question that it's become much more difficult to contain given remote working conditions that we all live under, and cybercrime will continue to dominate in terms of how it affects all of us, and we need to sort of watch that very carefully. Bribery and corruption is still considered to be very much commonplace, and that hasn't changed. And that number, that statistics is in fact from a 2018 report, and there's nothing that we've heard that number has changed at all. So this is another area of concern. And then we thought, or I thought certainly, that it was interesting that if you look at the companies vulnerable to financial crime, whether you're a private company or public company, that in fact public companies tend to be much more vulnerable to some of these risks and some of these issues. And then technology, if we turn our attention to that, there's been quite a bit in the last year and a half, in fact accelerating investment in technology. Because of the remote working conditions that we now live in, but also the recognition that in fact technology can really help identify financial crime. So 86% said yes, that is something that's helped us. Those who use technology also tend to have better collaboration with law enforcement in terms of identifying the types of criminal activity that they may be exposed to. We've also seen a majority, consider that technology improves the detection and mitigation, and they tend, in fact, to invest even more in technology in terms of identifying not only better screening practices, but also better risk typologies as well. But we also have the issue of data privacy in terms of having clarity on how data privacy provisions affect the anti-money laundering provisions. And this is very much something that comes out of the European Union and the General Data Protection Regulation. And here we have some work to do in terms of understanding how, on the one hand, we're trying to do more in processing personal information, better quality information, better typologies, versus data privacy, which tries to minimize data processing, tries to minimize the ability to use technology to make the fight against financial crime more effective, less costly, and also trying to address financial exclusion. So there more needs to be done in this space. We've certainly heard from the European data protection supervisors this is an area of focus, and I suspect that this will come at the fore and come into discussions very much in other regions, including India and many other discussions as well, including, of course, data localization, which is another issue that we're trying to engage with a number of jurisdictions, including India, trying to localize the types of data that they have within the country, and for many companies who are global with a global presence, that becomes difficult in terms of managing that type of restriction. And then lastly, or second to last, in terms of information sharing, and we really are big believers in how we can break down barriers between NGOs, the banking community, technology companies, payment services companies, in being able to share information in a much more effective way. And while historically, in the last few years, certainly the last 5 years, a lot of attention has been towards, consortiums and formats like the Joint Money Laundering Task Force that the UK have stood up, public-private information sharing partnerships that have stood up in Singapore, Hong Kong, Australia, and many other jurisdictions. And those primarily have been driven by either law enforcement or the supervisors bringing together a small group of banks to try to find a way to share information in a more effective way, which we are big supporters of. But there's a broad ecosystem of other organizations out there who have information, have data that could be quite useful. And so these are 4 examples of partnerships that we as a company have engaged with to do exactly that. We announced a partnership with Sentry, an organization based in Washington, founded by George Clooney and John Pendergrast, really to look at corruption in sub-Saharan Africa. We've also formed a partnership with the Freedom Seal, which was started by an extraordinary woman called Ronnie Hahn, who in fact herself was caught in child slavery in India, and has since become an advisor to the UN, and now the CEO of the Freedom Seal, which is a company that looks at and works with companies to look at their supply chain and certifies that in fact none of the products or services were caught in human trafficking. And so we're working with her not only to provide data, but also to engage with the policymakers to ensure that we as a company and the industry are doing our utmost to tackle this issue. United for Wildlife, we partnered with that organization, which is a consortium of not only the banking sector, but also the transport sector, to look at wildlife trafficking and the illegal wildlife trafficking. It's run and co-founded by the Duke of Cambridge. And again, we are there as a data provider, but also an operational infrastructure provider to ensure that there's a commonality, the data standards are there, the inclusion criteria is standardized in order to make sure that the best information is really available. And so we're working with United for Wildlife to scale and to scope and to being able to share that type of typologies in a more effective way. Most recently, we're also now working with the South African AML Integrated Task Force, which again is a collection of banks and non-banks to look at some very specific typologies, including wildlife trafficking, terrorism financing, and other risk areas, really to being able to scale, provide the best data available. So all these are examples of how we can operate in a different way, break down barriers, really look at working across different sectors, really to make sure that we bring the best talent and the best capability to bring to bear. And so this is an area that I encourage all of you, first for you to contact us if you're interested in participating, or certainly getting a sense of what we're doing in this space more technically, and also kind of what our plan is going forward. But this is an area that we're going to increase our focus in the next several years. And then lastly, the global coalition. So not only are we big proponents of working better, sharing information better at an operational, tactical level, but we also think that it's important to engage with senior stakeholders. So we co-founded the Global Coalition together with the World Economic Forum and Europol in 2018. Really with a few key objectives. The first is to raise awareness that, again, financial crime is not a compliance issue, but has grave impacts on the finances, infrastructure, and human and societal consequences, to promote more effective information sharing, how we can harness our best practices, and then really support governments and law enforcement and how we can bring all of our assets to bear. What started between the three of us, between Europol, World Economic Forum, and ourselves, has then grown quite a bit. And what you see here is really a representation of the anti-financial crime ecosystem. So it's not just the banking community via the International Finance Institute and European Banking Federation, but you have also the corporate treasurers who are there. You also have the Royal United Services Institute, the Freedom Seal, as I mentioned, Open Ownership, MENA Financial Crime Group, and many other organizations as well that represents, and then you also have FinTech, FinCrime Exchange, which is a consortium, an organization looking at FinTech specifically. So it's a wide variety of sectors and industries that are now part of this, and how we can best, again, harness each other's insight and capability and best practice. And I encourage you to go to our website. It's quite an extraordinary collection, not only papers, but also policy positions. And we think it's one way in which we can effectively engage with policymakers to bring them along the journey in terms of what we think is effective policy. Part of that has been to engage with the UK government on a data protection bill. We successfully amended or helped amend to provide further clarity on this issue from a UK's perspective. We've also successfully engaged with the European Commission on its AML action plan, and we are delighted that they've adopted many of the provisions that we support, including information sharing partnerships, including more clarity around data privacy and many other provisions as well. And we're also engaging with the MENA region as they now are actually considering to establish a regional public-private partnership, which we're delighted to do. And as well, some of the sub-chapters, we're delighted that John Cusack is your overall chair, and will remain so for the next few years. But we've also brought in some of the best and well-known leaders in this space to continue to drive some of these initiatives. So we have Greta Fenner, who looks at anti-corruption initiatives. We have Rob Wainwright, who looks at the critical question about how we measure effectiveness at the end of the day. And then we have 3 regional chapters and I mentioned the MENA chapter led by Ibtisen Lassoud, really to look at how we can form and promote public-private partnerships across the region as a whole. What we expect to do in the next year or so is turn our attention to Asia. So clearly this is, US, Europe, and MENA chapter focus as it's been in the last year and a half, but we will turn our attention to Asia and how we can engage more effectively with many countries in the region, including India. So so stay tuned. So stay tuned for that. I think I will end it there. I'm happy to take any questions. I hope you found that helpful to give you a whistle-stop tour of many of the initiatives that we're involved with, but also some of the global regulatory trends and some of the issues there. So I will stop there, hand it back to the host, and happy to take any questions.
Right, sir. So we have a few questions here. So I'll read out one of those for you. So it says, any significant differences in nature of financial crime and approaches to counter them in emerging markets as opposed to developed markets?
That's a great question. So I think fundamentally, no, it's many of the same issues. I guess the difference potentially is the impact on foreign direct investment, the impact of or perceived risks by companies to invest, and potential impact of capital flows to emerging markets. And we've heard that from in fact many industries who wanted to invest in South Africa, for instance. I was there before the pandemic to talk with some of the industry leaders who said, look, Che, we're willing to invest 50 billion in South Africa, but we just don't know, how that regime is going to play out in terms of the issues that South Africa has faced in terms of perceived corruption and some of the scandals. So I think those are, issues to consider. And one of the reasons why South Africa, of course, have taken measures, and I'm sure they'll continue to do so, to really be seen as a safe haven for investment that will, fuels not only infrastructure development, it increases taxes, that enables, in more investment in infrastructure, including schools, hospitals, etc. So I think, I guess that is one component that is, different, I guess, or a different take that impacts emerging markets maybe more so than developed markets.
All right, sir. So I guess we can take one more question from here. It reads, how is the disparity in accepting and acting on effects of green crime or environmental across regions and countries impacting the ability of the coalition to fight such crimes? Like, how can this be addressed?
Another great question. So it's important to note, of course, that we think of green crime as yet another example. So there's a difference between countries being affected where wildlife trafficking is being extracted, the countries and jurisdictions that are distribution points, and countries that are then end destinations. And of course, the countries most affected are the ones where the animals and the activity is actually occurring in terms of devastating the wildlife, the fishing industry, etc. And so, so I think that is one piece to remember. We also need to remember that it's, of course, cuts across not only the financial sector in terms of the laundering of or the proceeds of that activity, but also the transport sector, the customs union, who also need to be brought in here in terms of understanding how trading certificates are being exploited, and look much more closely in terms of the supply chain risks. So how the coalition is going to address this, we're already engaging with Financial Asset Task Force on this. We're also engaging with an organization to look at the international convention on this, which currently doesn't exist, because there needs to be laws and consistent laws on this issue in order to affect implementation and enforcement. And we're doing it via the Wildlife Trafficking Convention as a beginning, step, but we recognize that it's much broader than just illegal wildlife. It encompasses a much broader piece to that. So hopefully, I've got to there is a disparity in terms of the impact. There's no question about that. And in emerging markets tend to be the ones most affected in terms of the impact on its environment, the lacks of proceeds that are being generated from this activity that the government can use for green tourism and other areas as source of revenue.
All right, that was a really insightful session, and I believe that all of us had certain key takeaways to take from it. And I would like to thank you, Mr. Sidanius, for sparing time for this highly commendable talk. Also, another thank you goes out to all our attendees who are here with us today. Thank you so much, everyone, and we'll be back again with the next session. Please stay tuned.